Welcome to Hypergraph Hour, everybody. As you all know, this sometimes is our weekly event, sometimes it's a monthly event. I think last week really put a lot of things into perspective for the entire crypto industry, and really for us to focus on fundamentals and get rid of some of the shit that's out there that was circulating. I mean, I think we all had a moment of going like, God, what is going on? What is going on with the market? Can it always just keep going up? And sometimes these moments of retrace kind of allow us to focus internally, both like personally, as well as a company, as well as a community, and start to focus again around the fundamentals. And as Benjamin Diggles always says, like, get people off the crypto drunk for a moment and really look at what matters in the space. And as many of you know, as we've talked through a lot of partnerships, we've explained the technology, we explained the vision and roadmap, how our organization is structured. One of the most fundamental aspects of this business is understanding how marketing technology deployments all relate to market insights and trends. And this is one of the most valuable pieces. And Mathias is, one of everybody knows, one of the founders, is really our backbone to this organization in understanding how to perceive these trends. So I'm pretty excited today. Mathias and I work, we're on calls all day, every day together. And hearing his perspective on a daily basis is always encouraging. It also brings a lot of awareness. And today, he's going to talk through a lot of what's going on in the market, how we play into it, and what is on the horizon. And I think you're going to have a really, really strong perspective and confidence that Constellation and Lattice are always tuned in to market sentiment and dynamics.
Sweet.
So Mathias, I throw that to you.
Thank you, Ben, for that nice layup in the intro. Yeah, I don't want to, keep you on your seats too long. For those of you who are expert traders or market insight people, I probably won't be presenting too many new things. However, if you're interested in, the general market positioning, how Constellation positions itself and our business activity in relation to what happens in the market, then I would recommend you definitely stay for this one, because I want to draw a bigger context, a bigger framework today of what are the fundamentals of the market we're in right now? What are the short-term daily charts? But then I also want to go over some of the context metrics, aka narrative economics, and how they relate to us as a business and our business activity going into Q3 and Q4. So let me share my screen.
Yeah.
All right. Okay. Let's start with the market fundamentals. And a lot has happened in the past couple of days. We've seen one of the biggest intraday drops of Bitcoin and Ethereum in the market in general to date. And obviously, that fundamentally shifts sentiment, at least on the short term. And you all probably could feel it in the way not only crypto Twitter and the channels reacted to that, but we could also see it in the ecosystem, in some of the projects we're working with and we're investing in, and how capital flows in the ecosystem in relation to the market. And it really doesn't matter if it's like a $100 billion hedge fund that reacts to that in a similar way than like a small trader or a small token holder that only holds small amounts. The psychology and the emotions that are tied to that, nobody is really spared of that. And let's go into some fundamentals of where we are actually at in that entire scale of and scheme of things. So this is Bitcoin logarithmic growth curves. I got that from Look Into Bitcoin. That's one of the things I usually consult to see things in a larger perspective. And you can also pull that chart up in TradingView similarly. So this is all available out there. So what we see is Bitcoin is fundamentally distinguished in these halving events, and each halving event, has a cycle phase to it. And the general assumption pretty much by anyone in the market right now is that the fundamental metrics behind Bitcoin as the leading indicator in this industry will behave the same way it has been in the previous cycles, which means there is an inherent assumption that this cycle, like all the other cycles before, will behave maybe not exactly the same, but in a similar metric in terms of expansion, growth, and those things. And as supply is constricting, that's why this is on a log curve, price levels and all those metrics associated with it are drastically increasing over the years, as everybody knows. Now, when people ask me, okay, where do you think we are in the market? Is it going to go up? Is it going to go down? Then the first thing in the back of my mind I'll be pulling up is basically this long-term chart of Bitcoin and the fundamentals that go with that. And if I compare the previous cycles with the cycle we're in here on the right side, then this current drop tells me, A, we're slightly below the midline of the all-time trend. And at the same time, if I look at the two previous cycles, we are barely just in the mid of the time slice we're in. So we've had 6 to 7 months of bull market now. And if those time cycles remain similar or the same, then just purely based on those time cycles, we would expect to have another 6 to 8 months, possibly 10 months more in the tank. So that's the general fundamental outlook if you look at these time slices and where we are generally positioned. Now, let me give you a little more color on that. So now you would not only take that in terms of assessing the market, you would pull up other metrics as well that people tend to look at. One of those metrics is the 2-week moving average heat map. And also, you see at the colors of the dots basically show you if we are in an overheated stage of the market or if things are cooling down. And whenever it's cooled down, we have the blue colors noticeably in the bear trends or bear time cycles. And right now we've barely gone from green to yellow, and now we had that drop. So just from that heat map perspective, we haven't even gone into overbought or overexpanded territory yet. This is looking at that chart, at least, as the same as the logarithmic growth curve. This has just been a temporary dip. And actually for the long-term longevity, it's actually good that we have that dip, because the faster we have the upwards expansion, the more violent and fast will be the downwards correction. So from that perspective, it is actually pretty healthy that we have a decent pullback, because that allows growth in the long term. Next metric that is really important or should be kept in mind is the pure multiple. And basically that's the daily coin issuance divided by a moving average of daily coin issuance in US dollar value. Basically, it shows you if large token holders or large amounts of tokens change their owner. And usually tops of the pure multiple correlate with tops in market price. And then you can draw a red zone and a green zone as a sell zone and a buy zone. And the pure multiple, if you choose that metric, tells us right now that we're nowhere in an area where we're overexpanded. We're neither in a buy nor in a sell area. We're somewhere in between no man's land. And that's really important because it basically shows that not many of the large holders are dumping right now into the market. Another model that many people look at is stock to flow, loved by many, hated by some. Similar here, it's from the traditional markets, and it projects an expansion of price. And whenever it hits that next floor, you see an overexpansion of price by a couple of, many percent, and then it dials back into the median line around which price fluctuates. Another way of looking at that, but what you also can deduct here is we are nowhere in overheated territory yet from the stock to flow model. Now, two more metrics or one metric for two currencies that I always look at is exchange reserves. So if price or if the big players and the big institutions are really deleveraging themselves massively, and the market in general you would see that actually in the exchange reserves that are being held by all exchanges. And what you can see here nicely, the red line is the exchange reserves. So exchange reserves have been decreasing while price has been increasing. So that's an inverse correlation here, but that's exactly what you would want to see for a general market trend, because it tells you, okay, exchanges, people take their money off of exchanges because they intend to have it in their own wallets and not, be prone to counterparty risk on the exchange. Now we have seen the drop, and actually a little before the drop, you could actually see exchange reserves increasing slightly again in correspondence with the drop. So that's literally people putting more money into the exchange and selling it off on the exchange. However, on a grand scale of things, I would assume, yes, the reserves have increased. But if you compare it into the 2020 levels, where basically everybody was on edge for the next drop, we're still kind of in a healthy floor, kind of like a, not quite a bottom situation, but it still looks healthy to me. Same for ETH, and ETH is a little more interesting in that regard as well. The ETH reserves on exchange have been continuously dropping while price has been increasing. Same scenario like with Bitcoin. And now we saw that, the downfall in price with a spike of people moving on to exchange, but then immediately, and that's different than Bitcoin, exchange reserves have been dropping. So literally people just pushed a little bit onto the exchanges and then withdraw it immediately. And now price, in correlation with that, has immediately been starting to recovering. So both of these metrics for BTC and ETH are still bottomed out more or less. So that tells me that in combination with the heat map, stock to flow, logarithmic growth curve, fundamentally, we are still in the middle of a cycle. So fundamentally, if you analyze it that way, and there are many more metrics you can pull up, I just want to show you the most blatant ones, so to speak, to give you an impression where the fundamental stats of the network and the market are. Now, what does that mean on a daily basis for the charts, and then going on to what does it mean for us as Constellation? So looking at the charts, one thing I noted in our internal calls, and that was on the 18th, is that it was the Doge USD pair. And everybody knows Doge has been going crazy. I'm not pulling it up because of that. I'm pulling it up because Doge, like some other coins, actually displayed a divergence between price going up and volume going down. And that divergence is not only visible on Bittrex. You can also pull it up on Binance or all the other charts. It doesn't really matter. But basically, the breakdown or the slowing down of momentum has been, visible in that divergence. And we all know it broke down, because if price makes higher highs but less volume, that means that price is supported by less buying power, and eventually that whole pyramid or that whole thing of increasing price collapses and basically corrects itself to the medium. So Doge in that instance, like in many other instances, there's a leading coin or a leading indicator, and if you know which one that might be, or you see the signs in one of these coins, then that might be an indication of where the overall market is following. We saw a similar thing. Litecoin led one of the pumps, so to speak, at the beginning of the bull run last year. That was led by Litecoin. And why am I mentioning that? Because markets rotate, and it's not always Bitcoin leading. Sometimes it's ETH, sometimes it's LTC, and money circulates between those assets back and forth. And oftentimes there's a leading asset, and if you find that leading asset, that gives you a little bit of a heads up of what might be coming. Okay, so where are we today on the majors? So I usually, for my personal stuff or general market and charting, I use the Ichimoku Cloud. Those two lines are Tenkan-sen and the other one, which I always forget the name of. But basically, they're sort of lagging moving averages, and the cloud is one of the few indicators that actually has a projection into the future based on some calculations of past performance. But basically, the way you trade this is you trade crosses of those two spans here, and then I would need to explain a lot about the cloud now, but basically what it shows you here on the daily chart is that this is the place where you would have gone short when those two lines cross. Sometimes if there are recrosses, okay, it takes you out of a position, but then you just re-enter once the recross comes. So in that sense, it's a rather safe system. So here you would have gone short and you could have basically wrote that entire storyline short. But what it shows me in terms of, okay, where are we going from here? It shows me that there are now support turned resistance, and we have both those moving averages and the cloud are basically resistance indicators now, and we would need a close on the daily at least about 74.3 in order for that to turn bullish again. So on the daily, this looks kind of like no man's land. The cloud has turned red, which is also a bearish indicator. So if you look at the short-term time frame, that would be, for me at least, a risk-off environment until we see a recross of those two, and price would be ideally back above the cloud baseline. On the weekly, however, in general, if you apply the same principles on the weekly, we see here the all-time high from the last cycle, and then those two moving averages, and we see that we punched through both of them, but we built support at around 36-ish K. 36-ish K, that's the Bitcoin chart. So that would also mean, while there is temporary support, and that could possibly mean, okay, we could possibly see a V-shaped reversal here on the weekly. Who knows? But just from a macro trend perspective, the weekly indicator has not flipped, which would be a cross of those two moving averages, has not flipped negative. However, if we really fall through that 36 level where that current support hangs, based from a clouds system viewpoint, there's a lot of open space. And yes, of course, you can pull in volume as well, BPVR and so forth. So we would be having support in the lower 20s if that breaks through. However, from a long-term perspective, I don't see that right now. Similar on ETH. ETH looks actually a little better on the daily because we haven't seen the cross yet, even though price has dipped heavily into the cloud, which has formed support at around 1750. We have seen the bounce, and unless those two moving averages cross, that would be then the time to go short technically. However, at this point, until that cross happened, it's not clear, and often what could happen is that the price ranges in that little corner here between the cloud and those moving averages before it decides in either direction. On the weekly, same for ETH. We are currently sitting above both moving averages, which is actually a rather strong signal. But it really depends how that week closes. But right now, just from a long-term perspective, in combination with the fundamentals I've showed you in the beginning, that would not be an area where I would have massive panic. That's just based on how I trade these things. Obviously, nothing I say here is to be construed as investment or financial advice. Do your own due diligence. This is just merely reflecting my reasoning and my thinking on the market. And that said, the market can do anything at any time. So as they say, past performance is no indicator of future performance, and that is true. And well, that leads me to the next point, is how do our markets actually work, and how does that relate to where we are in the cycle? So now we know fundamentally, okay, things still look pretty good. There's not that much floating around on exchanges. If you trade the cloud or with other moving average systems, however you do it, usually you would probably be risk off, but you wouldn't be majorly bearish quite yet. Obviously, there are many different opinions on these things, but that's my personal take on that. So with all that, where does that bring us? You know, the narrative around why the markets have moved, everybody is repeating it. It's basically Elon tweeted. And I just want to take a moment and reflect on that, and why does that make sense? Why doesn't that make sense? And the problem is with figures like Elon. I mean, everybody's like, yay, Elon. It's like, no, that's, you know, is that really a good thing? Yes, it's cool if his tweets correlate with price upwards movements. But then if you see characters like that heavily engaging in an industry they are foreign to, and they are billionaires, and then you know that there's heavy institutional buy-in, as has been advertised the last 6 to 8 months, then you get an idea that the dynamics of this industry are actually and have been massively shifting over the past year. And while people repeat that, and it's like, yeah, Elon, he's such a cool guy, and he's building his character and his narrative, and sometimes it helps my trades, and sometimes it doesn't. It's a kind of like a cute thing. Well, don't forget that there are real money and power dynamics in the background, and usually those power dynamics are not meant to help you or help us. So I would really wait to see what comes out of all this before repeating narratives on green mining. Like, who's speaking about green mining, and why are they implementing such a narrative? Of course, you know, just from a point blank standpoint, green mining is a cool thing. We should all be more energy efficient, la-di-la-di-la. But why is this now all of a sudden a thing? Well, because Elon tweeted about it. And he basically kickstarted a whole avalanche of now people coming out on crypto Twitter. It's like, I have a protocol that's more energy efficient. By the way, Constellation is massively more energy efficient, of course. But what I'm trying to say here is it doesn't really matter, because Elon doesn't tweet that to get more market insights and find the protocol that is more energy efficient. No, Elon is promoting his own narrative, which we don't quite know what it is right now. So I just want to, you know, shed a little light of caution onto these cycles, and before jumping onto a bandwagon and trend that is probably not for the best interest of a regular market participant, because the outcome is just not clear. Or as they say in the data industry, if it's for free, you are the customer. And if you are being told the narrative, then the narrative is usually not what matters. It's the intention behind the narrative. And those two things widely, differ. And what I'm saying with this is that crypto or crypto marketing in general, we are at the forefront of digital propaganda. Or to say it a little more in nicer words, if you've read Robert Schiller, funny name, by the way, he has coined the term narrative economics. That means his theory is basically that you know, people talk about fundamentals and chart analysis and blah, 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 and everything's kind of like mathematically rearranged, and everything has an indicator, and everything's nice and fine and can be predicted. Well, he says that's all BS. Actually, the economics, and especially the economics of crypto, they work through narrative economics. That means you need a narrative in order to justify what is happening in the market. And oftentimes the narrative is actually an adjunct. It's not a leading thing. If you start to watch the news cycle very closely, you will see that many times the narrative comes after a market move, or simultaneously with a market move, and not before. So unless it's a very long-term narrative like DeFi or some of these other things. But what I want to say is crypto is a narrative economics. So the narrative is the fuel that basically runs the entire engine. So in order to navigate that industry better and understand market dynamics better, it really pays attention to look at who speaks, what is the purpose, or what may be the purpose, And who is actually, who portrays that perspective? Marketing or narratives have always a perspective, and usually the speaker or the intention of the speaker is not obvious through the content itself. So that's just a general thing here. And then also don't forget, there are whale games, as they call them. So liquidity is being hunted. Market makers and liquidity providers need liquidity. They need your liquidity for an up move or a down move. They need to grab that off of retail in order to funnel their next move in the market. And then ultimately for crypto, and that's a theory, that's a personal theory of mine, and I've been trying to find bits and pieces of confirmation over the years, but we're talking about a crypto economy that is now in the trillion, 1 trillion dollars right now. So we're talking about a global phenomenon. This is not just a couple of geeks. We're talking financial regulation. We're talking OECD, FAFTA, FACTA, national, international, and global frameworks that regulate financial flows. And those flows are incredibly huge. There is incredibly huge power interests associated with financial flows. And that's something to keep in mind now that we have this whole movement, especially in the last 1.5 years, of a movement into digital currencies. And those power brokers that used to be there, they're still there, and they just move their new power structure into these new technological boundaries. So when you hear these things about mining, China FAT has been around since 2014. This is nothing new. They have played that card multiple times. And then there are nation state interests at the same time that may be involved in some of these things, who owns a majority of the mining infrastructure or the country where it is placed in, that could be used as a geostrategical bickering and battlefield as well, given the financial interests. And then as a last point, of course, there are business interests. So people like Elon, Michael Saylor, and those guys, they all have business interests. They're not tweeting because they like you. They have ice cold business interests to expand their reach and their business models. So with that is more like a socio-anthropological perspective. But what does that mean for us at Constellation, but also in the crypto industry in general? And I really want to shed some light on that because, everybody's been so busy making money and following the next hype train that it's sometimes hard to step back and look at what are we moving towards to here actually? What is it that we're creating here? And if you step a step back, then we've seen a massive inflow of capital, but also regulation, government interest. CBDCs are now the talk of town, which is central bank digital currencies. The US bank has last week or the week before made an announcement that they are running already a US dollar CBDC trial run on their infrastructure. The European Central Banks has a working group around that, and I just talked to a professor friend of mine the other day, and she's part of that working group with the European Central Bank, and she said the only reason they have not been implementing digital euro is not because they can't do it, it's because they don't want to bankrupt the retail banks overnight, because once the wallets are controlled and held by the central bank, the retail bank, the reason for a retail bank basically ceases to exist, more or less from an infrastructure level perspective. So there's a lot of back and forth discussion going on. Okay, what is how do we do this? When I follow these things, I'm always concerned for the fact that, especially also looking to China, that digital money allows 100% oversight, and as long as digital money is not implemented like cash, and starts to become non-fungible, basically, because somebody can switch your wallet off or says, well, I don't like you to watch YouPorn with your credit card anymore, then the reason to have money or the way money was meant to be, that all switches. And with that, we have massive social shifts. And that is something we should be as a crypto community or actors in the crypto industry, I think that is something we should have in mind and not be, so to speak, lazy or complacent and be like, yeah, I made my couple of millions here or there. Well, while the entire movement in itself is actually furthering a whole other agenda that will, for one way or another, reshape our entire society. So, long story short, where does that leave us with Constellation, and what are the conclusions? So again, I said, if this cycle is like the past cycles, we have a good ways left in the tank. The summer quarters traditionally also in crypto have been rather weak periods. We had traditionally also mid-bull run drops like we're seeing now. Long-term indicators in my book are still green, and I talked to one of the leading liquidity providers today, and we discussed those things as well, obviously, and they've been telling me, we are not really concerned right now. There is still a lot of quality companies building in the industry. The momentum has not slowed down, which obviously is also mainly due to DeFi and NFTs, layer 2 scaling stuff where people then start to build on layer 2s. Also, in my book, we haven't fully seen a full rotation into mids, so we have barely scratched the last all-time highs, 2017 with Litecoin and the other mids. And also, I mean, that's something to debate because now the market has shifted because of stable coins a little bit, because people can, immediately exit and enter. The flow of capital through the entire ecosystem has changed a little because of that. So I'm not 100% sure on the alts, but the rotation into mids in my book hasn't really started either. I would expect more expansion beyond the all-time highs from 2017. The other thing, institutional interest, we all know it has increased. Like I mentioned, the effects of that are not quite clear either, because the more supply is in those people's hands, they have balance books to run, they have tax dates, they have investors, they have ROI that they need to show. So this will probably have in the short to midterm some effects on the entire industry, because they need to deleverage their positions at one point, and the bags, so to speak, that they're holding are much heavier than combined crypto retail. So will that increase volatility? Will that extend market cycles because price has increased so drastically and they have accumulated such heavy allocations? It remains to be seen. I don't know. So institutional interest here with a question mark. However, if you believe the news cycle, there's still, a lot of interest there. So we see news all day of bolstering up that narrative. Now, from a technical perspective, fees and scalability issues for ETH, which is, the one we're looking to with Constellation a lot, they still remain. And, that event, I was basically heralding last year in October when we incepted Lattice, which is black swan events. They do not only lead to cascading liquidations, but they make people stuck in their positions because gas fees and transaction fees become so high that if you have a $5,000 position locked in a contract and it takes you $2,000, as was the case during that spike, to withdraw that money in order to swap it for stable coin or get it out of a governance or a staking contract, well, you lose literally almost half of your entire position. That is not feasible for a retail investor. And so ETH has been tackling some of those issues with a block size increase, but that immediately got filled up as well to the maximum, basically, over the last couple of weeks. Now the layer 2 narrative is being driven with Polygon Matic being massively successful, and mainly because NFT creators need a platform where they don't pay $2,000 or even $500 to exchange NFTs, mint them, trade them, mine them, whatever. And then we have the EIP 1559 adjustments on the Ethereum network. It will change how gas fees are being calculated, and part of the gas fee will be burned. That is good from a trading perspective. However, it will probably not change the amount of fees that will be taken from retail users. So scalability is still an issue, and we all know layer 2 solutions have their own problems, and there is still no true cross-chain liquidity between those different layer 1s and layer 2s. I mean, there's bridges and stuff, but it's all kind of like a patchworky, haphazard system where there's no true connector piece that can connect all these layer 1s and 2 solutions with each other. So we see fundamentally, and now that ties into the market and price narrative of where we are in the cycle. Now that shows us, okay, we have a technical viability opportunity for Constellation, for Lattice, to actually show the market at the right time what we can do. So layer 0 on Constellation, on Constellation's Hypergraph, Lattice as a fully cross-chain liquid ecosystem where we can plug in the polygons and the polka dots and the bitcoins and the ethereums and have them all layer 0 cross-chain liquid with Lattice as a centerpiece between those different layer 1 and layer 2 solutions. So you can see how that all comes together, and then that goes in stride with our technical roadmap. We have bolstered up our engineering efforts massively. So we have an accelerated roadmap, and in Q3 and Q4 there will be major releases towards cross-chain liquidity and layer 0 implementation, state channels, Hypercube, and so on. On the Lattice side, we have very soon launching the Lattice Launchpad. We are already working and incubating ecosystem partners like Alchemy, Greenheart, and we have a whole pipeline of submissions that Benjamin Diggles talked about the last time. So this is now becoming an ecosystem that works and operates in stride of where we are in the overall cycle of the market. So that tells me, okay, we have a lot more to go, a lot more gas in the tank, so to speak, and we have a technically valuable and valid value proposition. We're not coming too late. We're not coming too early. Now it's time to ship product, and the product roadmap extends in the same way that we predict that the market cycle will extend. So we will be hitting those product milestones, the major ones in Q3, Q4, which is where we think at current date that the next big move in the market might be to be expected. So all of that works in stride. And if you look at all these subpoints that I mentioned here, cross-chain swaps, if you look at what other players in the swapping field, in the cross-chain field have reached, if you look at data validation and the federal engagements and the enterprise engagement that Benjamin Diggles is always talking about, and the progress we've made there. Hypercube with easy node onboarding, minting your own tokens, Node 2.0, where everybody can join the open network, everybody can become a node operator. Launchpad with the first project, Alchemy, being issued on the Launchpad very soon. Like each single one of these points, in our understanding, presents massive business opportunities and growth. And it's a matter for us to prioritize it in the right way, in the cadence to release it in stride with the market to benefit maximally from that. So we're really building that ecosystem, and those are the steps that are getting us there in stride with the market. And just as a last point on that's where I'm super excited. I'm excited about all these points, but this is where I'm really getting excited about is if I look at Rune, for example, Matic, Polygon, layer 2 on Ethereum. Rune has done the cross-chain stuff with BTC. And if you look at their market caps, I'm not even talking about price, I'm talking about market caps here and trading volumes in terms of token utility. There is huge utility to be had. And then what does that do for us as Constellation, as Lattice, as an ecosystem? How do we govern, Lattice? How does governance play into staking APY, in trading fees on a fully cross-chain liquid ecosystem? So you will see the metrics and the governance around those solutions will drastically grow and shift. And we will be talking in the future about money staked in the cross-chain pool. That will be a very important metric versus just price or trading volume per se. We will be attracting big capital, which we're already talking with already, of course. So big capital partners that will be preceding or partially preceding those cross-chain pools to fund those ecosystems and exchanges between ecosystems. So you can see the trajectory into which this is reaching for us, and that's why we all are extremely excited about this. And obviously, as a last point, our community to some degree as well. And I don't know if you've seen that, but I want to leave you with that. And I don't know if you can hear that on your end when I play that, but somebody, and I give a big shout out, has done a little rap video about Constellation.
Bussin', but I know what's coming. There's no fudding on this project. Let me show you something. Constellation network, increasing my net worth, and DAG is the token, the tech that I'm loving. No imitation, they're demonstrating the innovations. The invitation for business trading and liquidation. ETH limitation and high fees is what I'm hating. An indication of indignation, assimilating. Generative economics instilled in the code. Own your data, build your business, the network will grow. A self-sustainable ecological economy. The revolutionary L0 standard philosophy. So go get your bags packed, your knapsack and stack that. Countdown to lift off, fly higher than NASDAQ. No clapbacks by layer ones, no homie, can't have that. Shout out to the DAG fam, the DAG chats, grand slam. Woo! That was like 5 takes.
I was laughing when I saw that today. So seems like there's some good spirits in the community. And with that, I'll hand over back to Ben.
Yeah, Mathias, like you are an amazing breadth of knowledge when it comes to this, and it's so valuable to present all of these things and why we coordinate our marketing efforts and product releases in stride with market dynamics. As Mathias said, there's a disclaimer on this. This is not financial or investing advice. It's simply perspectives and how we look at things as it pertains to marketing as well as product shipment. So we pay attention to all these different things, these levers. Over the past week, the Stargazer wallet did an update. If you don't know, it's in the Google Chrome store. There is a Get DAG button in there that allows you to donate to the Stardust Foundation. It's our nonprofit entity. In exchange, you get a gift of DAG. And we've been seeing a ton of success, more than we really thought. It just shows how incredible our community is and how much of an appetite there is for getting DAG and kind of fueling our ecosystem. And in 24 hours, or I think it was 48 hours, we processed $100,000 in donation, which we do a 5% processing fee, where part of that goes to card issuers like Visa and Amex and MasterCard, and then part of it goes towards charities that we are working with through givebox.com. It's been an incredible partnership and something that we see as a huge opportunity to bridge the nonprofit industry with crypto and all the wealth that's built in crypto, and bridging the gap with nonprofits that tend to be underrepresented in the world. And so we thank you so much for the support. And there's so many things coming down the line with iterating on the Get DAG functionality, but it's really awesome to see that momentum and see that partnership kind of blossom. So on that note, we do have a lot of things coming up. This week we have some Lattice updates that are coming out before the weekend. We'll start to really push that next week. We're really excited around what's coming up with Lattice and what's being deployed by the weekend is it's some pretty cool stuff. I think the entire community will like. Beyond that, I can't thank you enough, Mathias, for sharing your insights and being part of this community. I mean, this gives a beacon for this entire community to follow, and how DAG relates to it, how Lattice relates to it, and where we are in kind of adoption in the entire industry. So on that note, thank you for this great Hypergraph Hour. Like, this company, this community is more excited than ever. We haven't slowed down one bit. Our every team is operating over the weekends, doing more than I've ever seen at this company. So it's really great time to get involved in DAG and kind of share what we're building. So thank you all.
Thank you all.